Today we will take up problem number 4 in question booklet, page number 36, as you can see. So similar to the one we have done in the previous classes. Rajesh and Rakesh are partners in a firm, sharing profits and losses in the ratio of 3:2. Their balance sheet on 31/3/2018 stood as follows. So here balance sheet is given. Look at the asset side, cash at bank, bills receivable, debtors, less PDD, provision for doubtful debts, already existing 1,000 rupees is there. Next, stock, buildings, machinery. Liabilities side, you have creditors, general reserve. General reserve is similar to reserve fund. Then capitals of Rajesh and Rakesh. So general reserve is divided among partners. It is undistributed profit or profits. On 1st April 2018, they admit Sham as a new partner and offered him 1/5 share in the future profits on the following terms. So there are 4 terms given, 4 adjustments given otherwise. A, he has to bring in, he means the new partner has to bring in rupees 10,000 as his capital and rupees 5,000 towards goodwill. So along with the capital, he has to bring in rupees 5,000 for goodwill. That is in the form of cash only. Nothing is mentioned. So it is in the form of cash itself. B, appreciate buildings by 20%. C, maintain 5% PDD on debtors. Provision for doubtful debts. Even they may not mention on debtors, it is understood. If you see the balance sheet, it is PDD is on debtors. Sometimes you may not find on debtors in the sentence given in the problem. So PDD adjustment is the most trouble one. You are seeing every problem is different connected to the provision for doubtful debts. So you have to understand the sentence, the method of working. You have to check it out. In each problem, it is different. This is the one that troubles you as a student when you're working. If you don't read it properly, it is going to be tough. I'll explain when I'm working the revaluation account part of it. Next, provide for outstanding repair bills 1,000. So prepare revaluation account, partners capital accounts, and a new balance sheet of the firm. So this is the problem given. So only 3 adjustments connected to revaluation, that is adjustment B, C, and D, only 3. Adjustment A will come in partners capital accounts, then in the cash account. So let me get into the problem working. Page number 36, problem number 4. 12 marks question. I'm ready with the format. So let me get into the first adjustment connected to revaluation. That is adjustment B. Appreciate buildings by 20%. Appreciate means increase. Building is an asset. So asset increases. Buildings is 25,000. As you can see here, 25,000. So that I have to take it on the credit side. Increase in asset. So it is a gain for the business. Old partners. So it has to be buildings account. Rupees 25,000 into 20%.
5,000.
Yeah, good. 5,000. Next, maintain 5% PDD on debtors. This is most important. Let me explain what is maintain. They say, according to this adjustment or terms, the new balance sheet should have a PDD of 5% on 18,000. So in the new balance sheet, they want 5% provision for doubtful debts. So they're expecting 5% of the debtors may not be received. It may be doubtful. But already 1,000 rupees is there, please remember. So in the new balance sheet, it is 5%. So how do we go ahead? Let's see. So 5% of 5% of 18,000 is only 900 rupees. That means they want PDD as 900. That is less than 1,000. So PDD is reduced. So when the PDD reduces, the loss reduces or the liability reduces. So we have to enter on credit side, PDD account. So how it goes, let's see. 18,000 into 5% is equal to 900 rupees. That's what they say. Minus existing PDD, 1,000 rupees. So PDD is reduced. If PDD increases, it will be on the debit side. So you may get an adjustment for increase also. So 5% is the value that should be shown in the balance sheet. Please understand, 900 should be there in the new balance sheet, but already 1,000 is there. So excess PDD is there. So that provision has to be reduced. That is what I have taken here. That is connected to the decrease in liability, 100 rupees. Next, provide for outstanding repair bill 1,000. So it is to be paid. So 2, provision for outstanding repair bills account 1,000. So only 3 adjustments as I told you. So B, C and D is done. So we go for balancing. When you look at it very easily, we can know the credit is more, 5,100. Take this 5,100 on the debit side. Then balance to old partners, capital accounts. Who are the old partners? Rajesh and Rakesh. So let us see the difference. 5,100 minus 1,000, which is on the debit side. So when you see the balance, you will get it as 4,100 as the balance. That 4,100 rupees to be divided among the partners in the ratio
Sir, 2460.
2,460.
2,000.
460.
Okay. Then for other person, that is Rakesh, 4,100 into 2 by 5.
It is 1640.
1,640.
1,640. Good. So how did we get this? This is an balance amount. This is nothing but revaluation profit. Profit because credit is more, debit is less. debit is less, so it is revaluation profit. Next, we'll move on to the first adjustment, that is Shyam has to bring in 10,000 as capital. Remember, 3:2 is the ratio. It is given here. Hope you're not forgotten. So I had done it. Here it is. Next, admit Shyam. So Shyam has to bring in 10,000 as capital. The first entry. So journal entry for capital brought in by new partner. Bank account debtor to Shyam's capital account. Why bank account? Please look at this. Cash at bank is given 22,500. So we have to open a bank account. So there he is getting 10,000 rupees as capital. Then he's also getting rupees 5,000 towards goodwill. Look at the second part of it, 5,000 towards goodwill. So second entry, when goodwill brought in the form of cash by the new partner. So similar entry of the previous one. Shyam bank account debtor to Shyam's capital, 5,000 rupees. Being amount brought in by new partner as premium or goodwill. That is the entry. Next, we have to close the Shyam's account. Remember here, Shyam's account to be closed. Shyam's account debit here because credited in the previous one. That 5,000 Shyam will give it to old partners because he has got profit from them. In the ratio again, remember 3:2, that is equal to 5. So that is going to be 3,000 for Rajesh, 2,000 for Rakesh. So this 5,000 rupees to be distributed among the partners in 3:2 ratio. So being goodwill of rupees 5,000 brought in by new partner divided among the partners in their sacrifice ratio, that is 3:2. That is a usual entry, what we have done earlier. Next, coming to the combined partners capital account. So I have three capital accounts, Rajesh, Rakesh, and Shyam as a combined partners. So always we have to start with by opening balance brought down. If it is on the liabilities side, the capitals are on the liability side here also. Rajesh 30,000, Rakesh 16,000. So 30,000 for Rajesh, 16,000 for Rakesh, and Shyam is nil because he is no more a partner yet. Then instead of reserves, reserve fund, we have here general reserve. So general reserve you find in liabilities side 4,000 rupees here. This 4,000 to be divided among partners in the ratio. Remember again the same 3:2.
2,400.
Good. 2,400 and
1,600.
1,600. Very good. So we don't have any P&L account here in the balance sheet. So no entry for P&L account. For first step is capital. Second step is reserve. Third step is P&L, which we don't have. The fourth step is revaluation profit or loss. So here in the revaluation account, we have a revaluation profit divided among the partners. So this has to be taken here on the opposite side. By revaluation account, revaluation profit, 2 becomes by here, 2,460 for the Rajesh, For Rakesh, 1640. So this is the fourth step. Steps you have to remember. Capital first, reserve second, P&L account third, then revaluation, profit or loss, opposite side. So we have to check in the revaluation. Here it is debit side. In the revaluation, it comes to the credit side of partners capital account. So we have to be very careful about this. The next is the capital and the goodwill brought in. So capital brought in is 10,000, goodwill is 5,000. The entry will be by bank account, capital and goodwill brought in 10,000 plus 5,000. Total amount brought in by the new partner 15,000. So out of that 5,000 is the goodwill. That 5,000 to be shared among partners. That is Rajesh and Rakesh. 5,000 in 3:2. 3,000 for Rajesh. 2,000 for Rakesh. So that has to be again debited to Sham, because Sham is giving to Rajesh, then Sham is giving to Rakesh. Remember, this is the most important entry you should remember. So Rajesh will get from Sham, Rakesh will get from Sham. Here on the credit side, partners benefit. So here Rajesh and Rakesh will get money here. Here Sham is giving to Rajesh and Rakesh amount. So you have to understand, credit is added to partners capital, debit is deducted from capital account of the partners. So now we can go for balancing. Credit is more for all the partners.
Sir,
Ah,
sir, in sometimes in balance sheet they give profit and loss on the liability side and sometimes on the asset side, no sir?
yes.
Which is profit and which is loss?
Liability side is profit. Liability side is
Okay.
profit. Asset side is loss. That's why I told you one more thing for you. You remember as opposite side. For example, general reserve, you have taken from which side?
Liability side.
So it has come to buy side, correct?
Credit side.
Correct. That way you can remember. Whichever side P&L account comes, general reserve comes, opposite. Even
Okay, sir.
even the same thing. Liability side buy, opposite. Asset side opening balance 2. So in that way also you can remember. It becomes easy for you so that you will not forget.
Okay, sir.
That is
Thank
easy
you.
way to remember. But rules wise, if you remember, liability shows credit balance, asset shows debit balance.
Excuse me,
Okay,
sir.
sir.
Sir,
So,
can you let Chavi inside?
huh?
Can you let Chavi inside? So she got disconnected.
No request has come for me. Yeah, okay, fine. So partners capital is completed, balances I have done. So let me move on to bank account. Bank account from balance sheet 22,500. So 22,500 opening balance, 2 opening balance brought down from balance sheet. Remember all the time. Next, to new partners capital account. Sham is a new partner. He is getting 10,000 for capital and rupees 5,000 for goodwill. So total amount brought in by him is 15,000. That's it. We can go for totaling of the bank account. 37,500. So closing balance also 37,500. Opening balance also 37,500. So this is the amount you are going to enter in the new balance sheet when you do as cash at bank. So to know that we are preparing the bank account, without that also we can do the new balance sheet. New balance sheet date should be on the date of the new partner joining to the business. Then we'll go for new balance sheet. Cash at bank, I made an entry. Next is bills receivable. We don't have any adjustment for bills receivable. So same amount, 3,000. Next, debtors, 18,000 inner column. Remember, less PDD rule says that it should be only 5%. So that is what you're going to find here. 18,000 into 5 by 100. This is what the one they said. 900 should be there, but it was 1,000. So we have reduced from PDD 1,000 from 1,000. We reduced 100 rupees. So that is what we have done here. You can see PDD we have reduced 100 rupees therein. So this is what the sentence they have told in the problem. It should be 5%, that is 900. This is what the one you should remember. Next, stock remains same. $20,000. Buildings, next one 25,000 is there. 25,000. We have an adjustment. Appreciate buildings by 20%. So appreciation is increase. We're wondering where is 5,000. So this 5,000 appreciation we have taken in the revaluation account. You can see here. So all adjustments taken in the revaluation should be there in the balance sheet. So I can show PDD otherwise in other way also. 1,000 rupees earlier minus 100. That way also I can show you. So 900. So that is what important. You can understand in the different methods, whichever is done. So 1,000 was the old one, 100 rupees in the revaluation. So it has become 900. So the way you want, you can understand the adjustment. Next, after building machinery 4,000. No adjustment for machinery. So 4,000 therein. Next, liabilities side, creditors 41,500. No adjustment. Outer column straight away 41,500. Next, general reserve. General reserve 4,000 already we have given to partners, so we don't take that. Next, partners capital, Rajesh and Rakesh. Rajesh, Rakesh, and Shyam. So 3 partners. So 3 partners capital, we take it from here. The opening balance or the closing balance, one and the same. For the first partner, copy properly when you're doing in the exam, in the class. Be careful with the amounts what you write. Then all the items of balance sheet are taken. The reserve fund we have not taken because we have taken in the capital accounts. Next is most important. I told you always we have to check in the revaluation whether we entered all or not. So for example, building we have done the adjustment, PDD we have done the adjustment, but we have not taken provision for outstanding repair bills in the balance sheet. So provision for outstanding repair bills is payable. So because it is payable, it is a liability, 1,000 rupees. It comes on liability side of the balance sheet. You can go for totaling and check it out, right or wrong. That tells you whether you're done right or wrong.